Cryptocurrencies are gaining worldwide recognition and are quickly entering mainstream banking systems. As such, there is no need to regulate them globally. This global regulation might affect Bitcoin and Ethereum, but the XRP cryptocurrency will be spared. This video discusses how IMF global crypto regulation will not affect XRP crypto. Keep watching. Why IMF global crypto regulation? Cryptocurrencies have been in operation for some time and offer some benefits. For example, cryptocurrencies do not depend on intermediaries such as banks or credit card companies to make transactions. As such, they help cut down transaction costs. There are some concerns for which the IMF believes there is a need to regulate how cryptocurrencies operate globally. Firstly, their volatile prices and limited transaction volumes make cryptocurrency relatively ineffective. Again, because any central government agency does not regulate cryptocurrencies, they sometimes breed cases of fraud, theft, and scams. Furthermore, because they are decentralized, it is difficult for regulatory bodies to check possible irregularities. The main concern about a global regulation policy is the differing approaches various international regulatory bodies use to regulate cryptocurrencies. We cover more of that later. Due to these, the IMF is calling for a global regulatory policy that is coordinated, so it can fill the regulatory gaps that arise from inherently cross-sector and cross-border issuance and ensure a level playing field. Consistent so it aligns with mainstream regulatory approaches across the activity and risk spectrum, and comprehensive so it covers all actors and all aspects of the crypto ecosystem. Energy consumption. A significant concern that has guided the IMF's global cryptocurrency regulations is how much energy cryptos consume. This is a result of their tedious mining and rewarding procedures. Leading cryptocurrencies such as Bitcoin, which uses the proof-of-work consensus mechanism to mine tokens and validate transactions on a blockchain, consumes much energy. According to TRG data centers, Bitcoin consumes about 707 kilowatt-hours of electricity per transaction. Again, Cambridge University reports that Bitcoin consumes 116 terawatt-hours a year, which is about 0.5% of the total electricity in the world, and uses more electricity yearly than countries such as the Netherlands, the Philippines, and Singapore. This is mind-blowing. CNBC talks more about this.
Bitcoin's annual electricity consumption is higher than countries like the Netherlands, Philippines, and Singapore. In fact, if Bitcoin were a country, it'd be number 33 on the list of top energy consumers.
This increasingly high use of electricity by cryptocurrencies has caused the IMF to regulate how much energy they can consume worldwide. The XRP cryptocurrency, on the other hand, is free from this energy-saving regulation. This is because, unlike Bitcoin and Ethereum, which are constantly being mined, XRP is not a mineable cryptocurrency. Please take a couple of seconds to subscribe to our channel. We have everything you need to know about other key IMF regulations and all Ripple XRP news. Let's continue. XRP News Today states that the 100 billion XRP coins that will ever exist have already been mined and carefully distributed. There's no way new XRP coins can ever be mined. This means that the XRP will not be affected by IMF's regulations concerning the amount of energy cryptocurrencies use to mine. That's good news for XRP traders.
Good news.
That is not the only good news for Ripple's XRP. XRP will not be affected by IMF's CBDC global policy and might even become a CBDC itself. We talk more about that later in the video. Stay tuned. But before that, let's examine some existing international regulations on cryptocurrencies. International regulations. Some international bodies have tried to regulate the use of cryptocurrencies over the years. For example, in the early years of cryptocurrencies, the Financial Action Task Force implemented a global framework for virtual asset service providers to minimize the use of cryptocurrency for the illegal transactions, such as money laundering. The International Organization of Securities Commissions, IOSCO, also brought rules to guide cryptocurrency exchanges. And the Financial Stability Board also regulated the use of stablecoins globally. You can see from these examples that there have been different approaches to regulating cryptocurrencies. The challenge is how to come up with a single defining global crypto regulation: central bank digital currencies. Various countries are looking for ways to transition to digital currencies, such as the IMF is contemplating bringing a global policy that will see the use of central bank digital currencies, CBDC. A CBDC is a digital form of a country's fiat currency controlled by a nation's monetary authority. The IMF wants a global implementation of CBDCs for various reasons. Firstly, introducing and using CBDCs will broaden financial inclusion by giving people easy access to free digital payment systems without a bank account. It will also stop illegal activities such as scams, money laundering, and financing of terrorized activities that rely on anonymous cash transactions and help check tax evasions. The main reason for introducing CBDCs is to enhance faster and cheaper cross-border transactions, which the IMF believes will boost trade. However, if a global CBDC policy is implemented, the XRP will not be affected. This is because Ripple, the organization behind XRP, is already collaborating with central banks to provide a common platform that will enable the use of CBDCs. For example, in September 2021, Ripple announced its partnership with the Royal Monetary Authority of Bhutan to pilot a CBDC in South Central Asia. It also announced the CBDC Innovative Competition in June, which sought to attract participants to build CBDC-focused applications. Again, it is piloting a private version of the open-source XRP ledger to provide central banks with the solution for CBDCs. Aside from these collaborations laying a foundation for a possible CBDC, Ripple's XRP fits IMF's cross-border reasons for a CBDC. It takes about 3 to 5 seconds for XRP to complete a cross-border transaction and has a scalability of 1,500 transactions per second.
Impressive.
If central banks approve Ripple's private open-source ledger, the XRP will likely play a vital role as a CBDC. Perhaps it could be a CBDC itself. Do you think that it's possible? Please share your thoughts with us in the comment section. If the XRP becomes a CBDC, do you think it could be the solution for businesses? We answered that in our video. Is XRP Ripple crypto the solution for businesses? What you need to know about XRP. Have an excellent time watching it and take care. Bye.